$0.27 reported for earnings per share, but the expectation was quite a bit higher at $0.41. So a noticeable gap there.
Okay, a decent miss on the earnings front. And how about revenue?
Similar story on revenue. Tesla brought in $19.34 billion for the quarter.
Which was below the forecast of, just over $21 billion?
Exactly. The forecast was around $21.11 billion. So yeah, falling short on the top line as well.
And just quickly, if you're finding this breakdown useful already, do give us a like and subscribe. It really helps us out.
Definitely appreciate the support.
So looking year over year, how does this Q1 compare to Q1 2024? That overall revenue figure, $19.3 billion, how much of a drop is that?
It's a 9% decrease compared to the same quarter last year. And, the main reasons cited were lower vehicle deliveries.
Right.
And also a lower average selling price, the ASP, on the cars they did deliver.
And I guess those two factors combined would hit the core automotive business pretty hard.
Very hard. In fact, the automotive-specific revenues saw an even steeper decline, down 20% year over year.
Wow, okay. 20%, that's significant. So lower revenue, missed earnings. How did profitability metrics look overall? Let's start with GAAP EPS.
Yeah, the GAAP earnings per share, that saw a really substantial drop. It came in at $0.12.
72 cents.
Compared to last year.
Yeah, compared to Q1 2024, that's a 71% decrease, a big, big fall.
71%, okay. And the non-GAAP EPS, the Zaralon 27 figure we mentioned earlier, that was also down considerably, though not quite as dramatically as GAAP. The $1.27 represents a 40% decrease year over year. Still, a significant hit to profitability.
Right, 40% is still a major decline. But I thought I saw something about gross margin actually beating expectations. Is that right?
You did, yeah. That was one slightly surprising point, perhaps. The total GAAP gross margin landed at 16.3%.
And the estimate was?
The estimate was a bit lower at 15.82%. So they actually outperformed on that specific metric.
So even with lower revenue, the profit they kept from each dollar of sales after the cost of goods was a bit better than predicted.
Exactly. Though it's important to note the total gross profit in dollar terms, which was $3.15 billion.
Okay.
That was still down 15% compared to last year's Q1. So margin percentage beat, but total profit dollars are still down.
Got it. Makes sense. What about operating income then? How did the core operations fare before interest and taxes?
That was another area showing significant pressure. Operating income came in at just $0.4 billion.
Only $0.4 billion. That sounds like a huge drop.
It was a 66% decrease year over year, and that translates to a really thin operating margin of just 2.1%.
2.1%. Wow. What drove that down so much?
Well, a few things mentioned. There was continued pressure from pricing, and the mix of vehicles sold maybe more lower margin Model 3s and Ys relative to others.
Yeah, price mix pressure.
Yeah. And then increased spending on R&D specifically for their AI and autonomy efforts.
So investing heavily in the future tech.
Right. And while they did benefit somewhat from lower raw material costs compared to maybe the peak,
sure,
it just wasn't enough to offset those other headwinds like the pricing pressure and the R&D spend.
Okay, that paints a clear picture on the profitability side. Let's shift to the vehicle numbers themselves. Deliveries, what was the final count for Q1?
Total vehicle deliveries for the quarter were 336,681.
336,681. And how does that stack up against last year?
That's a drop of 13% compared to Q1 2024. So fewer cars reaching customers.
And was that mostly Model 3 and Y again?
Overwhelmingly, yes. Those two models accounted for 323,800 of the total deliveries.
Yeah.
The vast majority.
Your production numbers, did they build fewer cars too?
They did. Total vehicle production for Q1 was 362,615 units.
Which is also down year over year.
Yes, that figure represents a 16% decline compared to the production numbers from Q1 last year. So producing fewer and delivering fewer.
Right. Okay, so far it's sounding, pretty challenging. Was there any brighter news in the report? Maybe cash flow?
Actually, yes. Free cash flow was a definite positive highlight in the release.
Oh, really? How much did they generate?
They reported free cash flow of $664 million for the quarter.
$664 million. How does that compare?
It's a huge jump, actually. That's up 126% compared to the free cash flow generated in the same quarter last year.
Wow. 126% increase in free cash flow despite the revenue and delivery drops.
Yeah.
That's interesting. How does that work?
Well, free cash flow calculation involves operating cash flow minus capital expenditures. So it could be influenced by working capital changes, timing of payments, maybe slightly lower CapEx than anticipated in the quarter, things like that.
Okay, and their overall cash pile. Still looking healthy.
Very healthy. They ended the quarter with $37 billion in cash equivalents, and investments, so a very strong balance sheet still.
Right, that $37 billion cushion is definitely significant. Any other positive spots? What about the energy business?
Yes. The energy side continues to be a strong growth story for them.
Okay, how so?
Well, energy storage deployments were massive. They deployed 10.4 gigawatt hours, or GWH, of storage.
10.4 GWH, how does that compare?
That's up an incredible 154% year over year. Really substantial growth in deploying those megapacks and power walls.
154% increase in deployments. That must have boosted the revenue for that segment quite a bit.
It certainly did. Revenue for the energy generation and storage segment climbed to $2.7 billion.
$2.7 billion. And the growth rate there?
That was a 67% increase year over year. So while automotive revenue was down 20%, energy revenue was up 67%. Stark contrast.
Definitely a different trajectory there.
Yeah.
Okay, so looking forward, what did Tesla say about the rest of 2025? Did they give updated guidance?
They kind of pulled back on their previous confidence, actually. They acknowledged there's growing uncertainty in both the car market and the energy market.
Uncertainty due to what, mainly?
A big factor they highlighted is the shifting landscape around international trade policy. Tariffs, supply chain issues.
Right, that seems to be impacting a lot of global companies.
Exactly. It affects the supply chain cost structures. And they also mentioned that, changing political sentiment could potentially dampen demand.
Interesting. And did they say if these trade issues affect automotive and energy differently?
They did suggest that the current tariff situation is likely to have a sort of relatively larger impact on the energy business compared to the automotive side.
Okay. So given all this uncertainty, what does it mean for their full year outlook? Are they still guiding for growth in the auto business?
They've stepped back from confidently stating that the auto business will grow for the full year 2025.
So no firm growth target for cars anymore?
Not for now. They basically said they'll revisit the full year guidance and give an update during the Q2 earnings call.
Makes sense to wait and see how things shake out.
Yeah.
What factors did they say would influence whether they do achieve growth?
They mentioned a few key things. One is how quickly they can speed up their autonomy efforts, FSD development.
Okay, the tech side.
Another is the production ramp up at their factories, getting Gigafactory Texas and Berlin fully humming, for example.
Right, operational efficiency.
And the third, unsurprisingly, is just the overall macroeconomic climate. Interest rates, consumer confidence, that sort of thing.
Yeah, the broader environment is definitely a big piece of the puzzle. Now, despite these less than stellar numbers, how did the stock react? I heard it was actually up slightly after hours.
It was, yeah. It showed some surprising resilience, even gained a bit temporarily right after the earnings dropped.
Why do you think that is? Usually misses like this would send the stock down.
It's likely investor focus shifting towards the future potential again. The narrative around full self-driving and the upcoming robo-taxi.
The promise of autonomy.
Exactly. That often seems to outweigh current delivery numbers or margins for some investors. It's that long-term bet.
So what's the general feeling among analysts right now? Is it still a buy?
The consensus rating among analysts is actually more of a hold right now.
A hold, okay. But does their average price target suggest upside?
It does, yeah. The average target implies there could still be potential upside from where the stock is currently trading, but you also hear some analysts saying Tesla's kind of at a crossroads, that they need maybe a renewed focus from the CEO, Elon Musk, on the core execution of the car business, not just the future tech.
Right, balancing the present challenges with the future vision.
Yeah.
So speaking of the future, what about those new, more affordable models? Still on track?
Tesla reiterated that yes, those are still planned for the first half of 2025. So seemingly no change to that timeline yet.
Okay, first half 25 for the cheaper cars. And anything new on the FSD or robo-taxi rollout?
They mentioned specifics there too. They're apparently anticipating starting a robo-taxi pilot program down in Austin, Texas as soon as June 2025.
June 25 for a pilot.
Okay.
And the wider FSD software.
The plan is to launch FSD unsupervised, so the version that doesn't require constant driver attention, supposedly, in the U.S. before the end of this year, 2025.
For year-end for unsupervised FSD in the U.S., that's ambitious.
It is. We'll see how that progresses. And one more future item, the Optimus robot.
Ah, yes, the humanoid robot. Any updates there?
They stated they plan to start deploying Optimus robots within their own factories beginning next year in 2026.
Using their own robots in their own manufacturing. Okay, interesting long-term play.
Definitely. So lots of forward-looking initiatives still very much in focus.
Okay, so let's just try and summarize the key takeaways from this Q1 report.
Sure.
First off, Tesla missed Wall Street expectations for both revenue and earnings per share in Q1 2025.
Right. Revenue was down 9% year over year, automotive revenue down 20%, driven by fewer deliveries and lower average selling prices.
Profitability took a hit too, with significant drops in both GAAP and non-GAAP EPS, and a very thin operating margin.
Yeah, though the GAAP gross margin percentage did slightly beat estimates, the overall profit dollars were down. Operating income fell sharply due to price mix pressure and AI R&D spending.
On the positive side, free cash flow saw a really strong year-over-year increase, and the company maintains a hefty cash reserve.
And the energy storage division was a major bright spot, with huge growth in deployments and a significant revenue increase.
Looking ahead, Tesla acknowledged increasing uncertainty, particularly around trade policy, and pulled back on confident full-year growth guidance for the auto business, planning to update in Q2.
Exactly. Growth hinges on autonomy progress, factory ramps, and the macro environment.
Despite the misses, the stock held up relatively well after hours, possibly due to optimism about FSD and robo-taxi, although analyst consensus is more cautious at hold.
And they reaffirmed timelines for the more affordable models in early 2025, the Austin robo-taxi pilot in mid-2025, FSD unsupervised by end of 2025, and Optimus factory deployment starting next year.
So a challenging quarter operationally and financially, but still pushing hard on future tech and expansion plans.
That sums it up pretty well. A lot for investors and, anyone following the company to digest.
Absolutely. Well, that covers the key points from Tesla's Q1 2025 update. If you found this discussion helpful, please do hit that like button and subscribe for more analysis like this.
Yeah, thanks for tuning in, everyone.